Okay, so good evening again to the Accounting Seminar 2020-2021. Welcome to our presentation on the Financial Administration and Audit Act and the Financial Management Regulations. My name is Damian Dunbar.
Good evening, everyone. My name is Clemar Johnson. Thank you for your introduction just now. I enjoyed listening to it. I was wondering who you were talking about.
Oh my God. You bring us back to the old days of accounting seminar, right, Clemar?
Can I tell you?
So we both will go through the Financial Administration and Audit Act and the Financial Management Regulation. And later on, you have Mr. Deslan Mackenzie. So with every presentation, there are objectives of the presentation. So we'll first start with the overview of the public sector entities. Sorry. Then we move on to the FAA Act, its budget cycle, major components of the FAA Act, and the Financial Management Regulation, which is a component of the FAA Act. Now for the overview of government entities. So the public sector consists of ministries and departments, which are governed by a central government regime. So this decision making is centralized in the ministries and departments, so to speak. And currently under the JLP administration, there are over 15 ministries. For instance, the Ministry of Agriculture, the Ministry of Youth and Information, the Ministry of Economic Growth and Job Creation, just to name a few. So these ministries are governed by a central government regime. Then you have the executive agencies, which are decentralized entities of government, and these agencies are governed by an Executive Agency Act 2002. These executive agencies are headed by a chief executive officer who are given delegated authority to make effective and efficient decisions that will improve the delivery of public service. We also have public bodies. Oh, but before I go into the public bodies, executive agencies, for example, you have the Passport Office, you have the Jamaica Customs Agency, the National Land Agency, National Environment and Planning Agency, Forestry Department, just to name a few. And then you have the public bodies or statutory bodies, which are governed by the Public Bodies Management and Accountability Act. So these entities are given semi-autonomous control to, again, improve public service throughout the sector. An example of a public body or statutory body would be the Jamaica Civil Aviation Authority or the regional health authorities, for example, SERA and NERA. So these entities are public bodies.
All right, so when you look at the comparison between commercial and government accounting, everyone here who is a part of the accounting seminar would know that the definition for accounting goes on the lines of recording, identifying, collecting, summarizing business transaction of a financial nature or a business firm. So the commercial accounting basically adopts this line of argument. But for government accounting, it's mostly treads on the brink of accounting for public funds and public properties. Now, in government accounting, there's two types of system that is practiced. You have the cash basis system and you have the accrual system. Now, in the cash basis system in accounting, for finances. This method basically is where you record the cash receipts when cash is received. And the accrual system is where you record the transaction once it has occurred. Now, the main difference in these two accounting principles is when do you recognize revenue and expenses? Which is more effective, you may ask? Well, there are some features in the cash accounting system. For one, it can be manipulated by business to reduce their taxable income. So for example, perfect example is this. Small business generally use this, like the Chinese wholesales would have a cash basis system. So they only record when they receive cash, and closer to the end of the year, an entity may increase their inventory in order to reduce their taxable income. Another feature of the cash basis accounting is that it does not keep track of payables and receivables, and neither do they operate on a credit basis. In comparison, though, the accruals basis gives a more accurate and factual information for the financial information. And what happens in this accrual basis system is that you may end up though paying more tax on monies not yet received, and it is also subjected to more rules and regulation, for example, accounting for depreciation.
And Kamar, just to add to that, the government is currently in a transitional phase, right, Kamar?
Definitely. And so what you'd realize is that for some government entities, they don't use a cash basis of accounting. They don't use an accrual basis. They use what you call an hybrid both, which is the modified accounting. So because they're making that transition, they use what you'd call the modified, where they use a little of the cash, a little of the accruals account system. And the entities that you'd mostly find using the modified accounting systems are like the municipal corporation, because those are the entities that can, you would say, identify certain assets that they own.
And just to add to that, Kamar, the executive agencies and the public bodies are required to make their own revenue. And these entities have receivables and they do investment. So the public bodies and the executive agencies are normally the ones, are currently the ones using the accrual accounting concept.
Right on the button.
Somebody speak? Okay. Right. Next.
This is mine, right, Kamar?
Yes, sir.
Okay, so the Financial Administration and Audit Act is basically created to guide public servants in ensuring that there is fiscal prudence in the management and accounting of government funds in a transparent and accountable manner. It's referred to as a Bible for public servants. Now, with the FAA Act, the government introduced in 2017 the financial instructions, which have been established in order to improve and clarify the standards of the financial control within government. It is developed to be consistent with the Financial Administration Audit Act, financial management regulations, and international best practices. The financial instructions will assist in providing appropriate levels of management and governance of public finance. So we have the FAA Act, which is the original document which guides government accounting and the usage of government funds and the management of government accounting. But the government introduced the financial instructions to assist government workers in giving clarity to the provisions of the FAA Act so that they can easily understand what they are to do or what are expected of them as government, as public servants, managing the government funds. Now, the Financial Management Regulation is also a subset or a component of the FAA Act. It governs the financial management by establishing and enforcing the requirements, principles, systems, procedures, and practices necessary to comply with the provisions of the FAA Act. So, for instance, the Financial Management Regulation will tell you that you must have proper internal control, or effective internal control to safeguard government assets. So it will tell you about keep inventory of GOJ property. You must do monthly bank reconciliation of our government bank accounts. You must exercise risk assessment or conduct risk assessment within your government entity to identify risk and to find efficient and effective ways to reduce risk that may affect the entity.
We now look at the budget cycle. Now, what is a budget? Well, many persons here would know what is a budget, because from going to work or going to school, you would have been doing a budget as to how many you spend on transportation, how many you spend on food, how much cash you will use to go out with your friends. Also, where are you getting the cash from? Are you getting it from a job? Are you getting it from your parents? Now, but in the context of government, the budget is an expression of public policy and political preferences. Now, the absence of ownership in government makes it problematic to apply the accounting equation, assets equal to liabilities plus owner's equity. And it is squarely profit equal to revenue minus expenses in the public sector. So a lot of entities, especially those in the central government, they don't own what you'd call assets per se. So a lot of times you will see in their statements, their final statements, which will be discussed later on, it's just what they have earned versus what they have expended. All right. Now, when we look at the budgets, when you look at the budgets, the government operates two types of budgets: the recurrent budgets and the capital C budget. The recurrent budget is what governments use for their housekeeping expenses. What you'll find in these budgets are like salaries, and these are under what you things that you're called objects. So when an entity as their estimates, if you were to take up an estimate of expenditure and look at it, you would see a ministry head. For example, the Auditor General would be 05,000, and then you would see another number for Ministry of Tourism, Ministry of Health, etc. And then under that, it is broken down into objects, and which is also another code, and then activities. So you will have, for example, 21 will be for salaries and wages, 24 will be for utilities, 25 goods and services, object 31 fixed assets. Now those are for the housekeeping expenses. Now you have the capital C budget, and this budget is where funds are received from bilateral and multilateral organizations, and it is pulled together with your tax dollars to carry out infrastructural projects. These projects are designed to effect social or economic infrastructural changes, and the highway is a perfect example. Highway 2000 is a perfect example of this. Now, before there was a capital C budget, you had capital AB, but there's no longer a capital A and a capital B. They just combine it, and it's now a capital C budget. Go ahead, Damien.
Okay, so the government issued a document, the Citizens Guide to the Budget 2021-2022 in the Sunday Gleaner. Anybody in seminar about the Sunday Gleaner? Hello?
Rarely, sir.
Okay, so in the Sunday Gleaner, the government published a breakdown of its budget. So what Kemar just mentioned, for instance, in the expenditure budget, the government listed wages and salaries of $239 billion. And the total expenditure budget for the upcoming financial year, April 1 to March 31st, is $830.8 billion. So I will implore the seminar group to acquire this Citizen Guide to the Budget, which breaks down how the government plans to fund its budget, so its revenue budget and its expenditure budget, what it plans to spend on for the upcoming financial year. Go on, Kimar.
Okay, and the financial years for government runs from April 1st to March 31st. As in comparison to many commercial entities, they use a calendar year, January to December 31st. The government use April 1st to March 31st. We will look at the budget cycle, how we arrive at it. Now, the first thing it starts from is a budget call, which and this is done. So you have a budget call, and then you have what you'd call the budget submission and review. And then from that, then it moves to the next stage where you have the budget meetings and with the PFO or the head of the entity. So they will go to the Ministry of Finance, and they will have negotiations as to what they want to be included in their budget. And the deliberation will take the form of negotiation to say that this is what we need and stuff like that. And then there will be an agreement. Once this is done over that time period, which we will go into, it is then combined and draft into a big budget, an overall budget for government, which is to be laid before Parliament. When it is laid before Parliament by the Minister of Finance, it is reviewed and voted on by the Standing Finance Committee. Now, the Standing Finance Committee is made up of 63 members, and these are the 63 members who were voted into Parliament. And after there is a debate by the Standing Finance Committee, now the appropriation bill is passed into law by Parliament, and then it is issued into the estimates of revenue and expenditure.
Now, just to add some meat to what Clemar is saying, the minister shall issue a directive known as a budget call no later than November 30th, my apologies, of each year. The budget call contains the economic and fiscal parameters which will govern the preparation of estimates of revenue and expenditure for the succeeding financial and the medium term, financial year and the medium term. Now, the budget call means written instructions issued by the Financial Secretary, the Minister of Finance to departments for the submission of proposals for their budgets, corporate plans, and operational plans in respect of the ensuing financial year. Now, the budget execution is the process by which the financial resources made available to ministries, departments, and agencies are directed and controlled toward achieving the purposes and objects for which the budget was approved. This shall be done in accordance with laws, regulations, instructions, and established policies and procedures. Now, if you look where it says in the first paragraph, estimates of revenue and expenditure, I suppose some of the accounting seminar attendees are currently working in the government sector, and you will realize that in your accounting department, there is a big yellow book. So that big yellow book that your account manager has in his or her possession is that big book that contains the estimates of revenue and expenditure that is approved annually by Parliament. And in the estimates of revenue, this basically contains all the revenue that your finance head proposed to the government that they intend to earn in the upcoming financial year or incur in the upcoming financial year. And the estimates of expenditure are all the transactional activities that the entity has planned to pursue. Now, in preparing the draft estimates relating to his department, the accounting officer or the head of entity in a government sector, whether the CEO, regional director, or the chief executive officer, is responsible in particular for ensuring that, all services which can be reasonably foreseen are included in the estimates and that they are within the capacity of his department during the financial year. The estimates have been prepared as completely and accurately as possible. The The estimates have been framed with due regard to economy and efficiency. The requisite authority has been obtained where necessary before provision is made in the estimates, and estimates are submitted in due time and in proper form. Now, the budget call shall contain the following: a corporate plan, operational plan, procurement plan, expenditure and revenue budgets, cash flow forecast, permanent secretary's memorandum, and any other document prescribed by the minister. Now, as it relates to the plan, the Financial Administration and Audit Act and the Financial Management Regulation indicates or dictate to public servants or civil servants, as they call us, that the plans must be realistic, guided by the medium-term socio-economic plan for the government, and they must be aligned within the priorities or the objectives of the cabinet and developed within available resources of your entity. So for example, when you're preparing your procurement plan, you must conduct a needs assessment of all the requirements of your particular entity if you're in the procurement department in the government sector.
Okay, so we're looking now at the appropriation bill. Now, as I mentioned in the cycle where the appropriation bill would be passed into law, the minister shall cause this bill in respect of each financial year to be laid in the House of Representatives no later than 1 week after the standing committee has completed its examination of the estimates of revenue and expenditure. So we are currently in that phase. If you see where we are having the debates now on the budget. So once that is completed, 1 week after, this shall be laid and into the House of Representatives and pass as law. Now, the minister in writing may direct that any revenue received by an accounting officer by way of fees, penalties, or proceeds of sale by any extra or unusual receipt shall be included as an appropriation aid in the annual estimates of expenditure. So what is appropriation in aid, you may ask? Now, the appropriation in aid means that any revenue which a department collects in the ordinary course of business by way of the extra unusual. So during the negotiation process in the budget cycle, the CEO or the ministry may say to the Ministry of Finance that, yes, we can make 1 million additional as it relates to, for example, parking fees, the municipal corporation, $1 million extra this year based on our forecast. And then the Ministry of Finance will say, okay, if you can make an extra million, 500 of that should be lodged to the consolidated fund. And then the next 500 can be kept by your ministry and be spent this way or that way. So clear instruction has to be given how that money is to be spent, even though they are keeping that money. So there's still accountability around that to say, all right, you can keep that extra 500 for us keeping matters. Now, for supplementary estimates, a lot of times this also comes up in the news. The supplementary estimates is where whatever was not considered in the budget in the first place can now a supplementary estimates can be provided so that at the earliest opportunity time for them to either to transfer the fund or to recast the budget. So if you look at what is happening now in Jamaica, in the world, but in Jamaica's context where we have a pandemic and there's a lot of things that we wouldn't have forecasted in our budget regarding a pandemic. So now the ministry, we might go back to the Ministry of Finance and say, listen, we need to put some money over this so that we can cover this, or we need to cover that. And because the minister is also seeing what is happening, he can say, all right, we will draft these changes into what you call a supplementary estimate and via funds or recast funds from what we had previously said we would have spent on.
And Clemmer, if they were listening to the happenings last year, when the budget was approved last year, the government had to reissue urgently an estimated supplementary estimate to the approved budget based on the situation with COVID-19.
Yeah, so you'd have increased, maybe an increase would have gone to like the Ministry of Health.
Right.
And maybe a decrease would have gone to like Ministry of Tourism, because you wouldn't have had maybe that amount of activity in that ministry. Or
so
ministry
that Nigeria Clark would come to Parliament to request the approval of a supplementary estimate to pass, that's passed in Parliament.
Okay. All right, now notwithstanding parliamentary approval of the vote, expenditure shall be controlled by the warrant instrument which regulates such expenditure by a proper system of commitment, planning and control established and maintained by the accounting officer. Now, what I want to point out here is it makes mention of what you'd call the vote, which is basically the approved budget. Now, before, I didn't put this on the slide, but I want to bring it up. Before, during the period when there's a debate going on with the budget, of course, the country's affairs has to go on. And so what would happen is that accounting officers would then be given an amount in which they can carry on their expenditure until the budget is passed for this year, and that is called a vote on account, right? And it make the necessary, and then they will make the necessary entries in their books in respect of that amount. Once the budget is passed and the vote, then that would be adjusted. Their books would be adjusted to reflect the vote on account which they got to carry on the affairs of the ministry.
And just to add to that, Kemar, a commitment system basically is blocking funds in your accounting software. So if you are approved $50 million, for instance, to spend on traveling expenses, traveling and subsistence, in your accounting package, you must put to that particular object code for traveling and subsistence that $50 million in your accounting package as a commitment so that you don't overspend. So the commitment system is basically guiding you, like it's a budgetary control to guide how you allocate funds based on what was approved in your estimate of expenditure.
Okay. Under Regulation 20, accounting officers shall, upon the request of the Financial Secretary, submit proposal for those adjustments to the voted provision, and it would be incorporated in the supplementary estimates. Now, as I mentioned earlier, the main bank account for the government of Jamaica is the consolidated bank account. And this is by law, this is by the Constitution. This is the main bank account. Yes, there you have it, section 114 of the Jamaica Constitution give rise to the consolidated fund. And the chief function of the accountant general is to maintain the government of Jamaica finances. So you have so don't mix it up now. You have the auditor general who has a different role, and the accountant general who has main control of the government's finances. Next. Also, for annual statements in respect of each financial year and within a period of 4 months after the end of such financial year, all accounting officers shall prepare and sign and transmit to the minister and the auditor general the statements relating to their financial activities. So what I mentioned earlier about the appropriations, some entities will submit appropriation statements showing their revenue and expenses, and other entities who are operating on the accruals basis will submit their balance sheet, their cash flow statements, and the other relevant statements.
So,
right?
So just to add to that, Kemar, for example, the public bodies, the Civil Aviation Authority, they are required to submit their financial statements to their respective minister. So that would be the Minister of Transport and Mine, I believe. That's the correct name.
Okay.
Right.
All right, so we then look at, skip please. we then look at the financial secretary. Now, the financial secretary is just, many times you'll hear about the financial secretary or the permanent secretary. They are one of the same. The difference between the financial secretary and the permanent secretary is the permanent secretary will be the administrative head of the other ministries, while the financial secretary is the direct administrator for the Ministry of Finance. I mean, you can appreciate that the finance minister won't necessarily sit at a desk doing all of those things that we're talking about and signing this, signing that. So you have what you call as financial secretary, who is responsible for the flow of financial resources in and out of the government's treasury. The financial secretary at times will, I'll say, make decisions on the purchase, for example, of sale, disposal of goods and services, collection of surcharge, etc. So in context, the financial secretary assists the minister to oversee and implement the policy. And so ministries and departments have to pay close attention to circulars that comes out of the Ministry of Finance, because time to time, the financial secretary will issue new directives on how to account for government revenue, and other instructions will come from the office. And the current financial secretary is Darlene Morrison, right? Warrants is not the one that the police use, but this is the one that gives permission to charge an amount from the consult fund. And it should be, and no fund shall be remitted from the consolidated fund unless it is done with the approval of a warrant coming from this authority of the minister. Right? Expenditure, an accounting officer shall not make any payments in excess of the amount specified by the minister or enter into any commitment in excess of the amount specified in the estimates of expenditure. So just like what Damien said earlier, where you have to commit funds, yeah, you can't spend outside of what is committed to spend without you getting the proper approval, right? Now, authorization of payments under the FAA Act Section 90C says that no payment shall be made from any consolidated fund, from the consolidated bank account or any other official bank account of the government unless there is a voucher for that payment and it is certified. So you will have the commitments and those have to be certified and passed through the relevant authority signees, and all of that has to be in place before you can expend any funds for the government.
And the financial management regulations speak about certification and authorization. If you have a payment voucher, you must have a supporting document and an original invoice to support the payment voucher.
Okay, Damien.
Okay, so under the FAA Act, it's very important to know the difference between accounting versus accountable officer. Now, accountable officer means any public officer, including an accounting officer, concerned in or responsible for the collection, receipt, custody, issue, or payment of public monies or other public property. So if you work in the accounts department and you're in cashier and you're collecting government money, you are considered as an accountable officer. If you're in the accounts department at the customs agency and you're preparing payment vouchers to input in the accounting software, you are considered an accountable officer. However, if you are heading an entity, you are considered as an accounting officer. For example, chief executive officers of executive agencies, regional directors of the regional health authorities. These persons are considered accounting officers. They're accountable to the minister for expenditure or on any service in respect of which monies have been appropriated under this act or under any other enactment. Now in government, or what the FAA Act dictates in the purview of official receipt means a receipt prescribed by the financial secretary for the collection of public funds. Except where otherwise provided, officers collecting public funds shall issue official receipts on the form prescribed or approved by the Financial Secretary for all sums collected. Receipts may be in the form of an electronic document produced by an electronic communication system. Now, in government, some government entities, for example, central government, may utilize a manual receipt book. And what the FAA Act dictates that the book should be printed in triplicate. So if you prepare a receipt for a customer, all 3 pages must be noted on. There must be some form of documented description on all 3 pages. If you cancel that receipt book, all 3 pages must remain in the receipt book.
And our receipts are coded.
Right. An accountable officer shall not assign the duty of collecting public money or public monies to any person other than permanently appointed officers in government, except in exceptional circumstances where written approval is given by the accounting officer. So if you're not permanent, the FAA Act say you can't collect government money in layman terms. Now, principal receivers of revenue and other accountable officers shall ensure that for all amounts credited directly to the revenue or to any other official bank accounts, they must indicate the source and purpose of them. They must indicate the source and purpose of that amount and ensure it's identified. An electronic document or other appropriate form of advice is submitted promptly to the payer, notifying the amount received, and the appropriate accounting entries are made in the department's records to reflect the amount received. Now, payment of revenue. Accounting and accountable officers collecting money shall not make any payment from revenues collected without prior approval of the Financial Secretary, that's Darlene Morrison at the Ministry of Finance, except for authorized refunds and drawbacks. So in the government sector, usually the government sector, the entities are required to have an AIA bank account to collect your revenue, so that any refunds that you're giving against the revenue have to be drawn from that account. The Financial Secretary, upon approval granted by the Minister in accordance with Section 8 of the Act, may allow departments to use revenues collected or a portion thereof to defray expenditure. So, sisters and brothers of accounting seminar, government accounting we don't account for bad debts in government. Principal receivers of revenue and accounting officers shall collect and account for revenue and other public monies within their control in accordance with such instructions as may be issued by the Financial Secretary, and ensure that all revenue is collected, all revenue. So we can't have provision for bad debts like in the private sector. Ensure that all revenue is collected without delay, and shall inform the Financial Secretary of any significant shortfall in collections or difficulties in collections, or of any important trends in the receipt of revenue which may become apparent. Now in government, if you fail to follow the provisions of the FAA Act and you commit a financial misconduct, you're liable for what is called a surcharge. So a surcharge is a provision of the FAA Act which allows for the recovery of monies lost or the value of the loss of property or other assets that have been destroyed or stolen as a result of negligence on the part of the public officers. So if the government give you a laptop as the manager of accounting and you leave the laptop in your car and you park downtown at the Chinaman shop and you come out of the car and the government laptop gone, you are liable for a surcharge. Surcharge, go on, Kumar.
Yeah, I said after investigation, right?
Right.
And then the last slide now, we will just look at, just give you a synopsis of what the duties of the Auditor General is. So under Section 25 of the FAA Act, the Auditor General shall perform in its function under the Section 122 of the Constitution, in his opinion, shall rule on the procedures applied on in the preparation of the accounts. So they shall look at if all monies were expended and charged to the appropriation has been applied for the purpose for which it was made, and indeed it is done to see if the ministries or departments give due regards to the avoidance of wastage and extravagance. And that is the end of our presentation. Thanks everyone for listening. And I hope that we were able to impart something